This meeting is being recorded.
Welcome to Aurobindo Pharma Q3 FY23 earnings call. Please note that all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks. Please note that this conference is being recorded. I now hand the conference over to management for opening remarks. Thank you, and over to you.
Thank you, Vandit. Good morning and a warm welcome to our third quarter FY23 earnings call. I am Deepti Thakur from the Investor Relations team. We hope you have received the quarter 3 FY23 financials and the press release that was sent out yesterday. These are also available on our website. I would like to introduce my senior management team today on the call with us, represented by Dr. Satakarni Makkapati, CEO of Aurobindo Biosimilars, Vaccines and Peptide Businesses, Mr. Yugandhar Puvvala, CEO of Eugia Pharma Specialities Limited, Mr. Sanjeev Dhani, COO and Head Formulations, Aurobindo Pharma Limited, Mr. Swami Iyer, CEO, Aurobindo Pharma USA, and Mr. S. Subramanian, CFO. We will begin the call with summary highlights from the management, followed by an interactive Q&A session. Please note that some of the matters we will discuss today are forward-looking, including and without limitations. Statements relating to the implementation of strategic actions and other affirmations on our future business development, and commercial performance. While these forward-looking statements exemplify our judgment and future expectations concerning the development of our business, a number of risks, uncertainties, and other important factors may cause actual developments and result to vary materially from our expectations. Aurobindo Pharma undertakes no obligation to publicly revise any forward-looking statements to reflect in the future events or circumstances. With that, I will hand over the call to Mr. S. Subramanian for the highlights. Over to you, sir.
Good morning, everyone. I wish you all a very happy and prosperous new year. We are here to discuss the results for the third quarter of the fiscal year FY23 declared by the company. For Q3 FY23, the company registered a revenue of 6,407 crores, an increase of 6.7% over Q3 of last year and 11.6% over the previous quarter. The EBITDA before Forex and other income stood at rupees 954 crores. EBITDA margin for the quarter was 14.9%, an improvement of 30 bps over the previous quarter. The margins improved on a quarter-on-quarter despite increased R&D spend during this quarter by rupees 140 crores over previous quarter. The additional R&D spend amount to 1.7 on the EBITDA margin. The net profit stood at 491 crores, increased by 19% over previous quarter. In terms of the business breakdown, formulation business in Q3 FY23 witnessed a growth of 9.2% year-on-year to rupees 5,452 crores and 14.3% quarter-on-quarter and contributed around 85% of the total revenue. API business contributed around 15% and clocked a revenue of rupees 955 crores for the quarter. For the quarter, the revenue from US market has improved by 9.3% year-on-year to 3,001.2 crores. On a constant currency basis, US revenue was flat year-on-year and improved by 10.3% quarter-on-quarter to $366 million. We have received final approval for 15 ANDAs and launched 11 products in the quarter under review. We have filed 11 ANDAs, including 6 injectables during the quarter. Revenue for Aurobindo Pharma USA, the company making oral products in the US, has increased to 2.5% year-on-year for the quarter in rupee terms. Revenue for US specialty business in the US increased by 6.1% year-on-year to rupees 501.5 crore for the quarter. Including the direct sales, the overall oral sales amount to $252 million against $230 million of previous quarter, i.e. a growth of 9.5%. The company as on 31st December 22 has filed 767 ANDAs on cumulative basis, of which 542 as a final approval and 38 having tentative approvals, including 8 ANDAs, which are tentatively approved under the PEPFAR, and the balance 187 ANDAs under review. For the quarter, European formulation revenue clocked to 1,701 crores, marginal increase of 4% year-on-year growth and increase of 12.2% quarter-on-quarter. On a constant currency basis, revenue touches euro 203 million against euro 189 million of last quarter. For the quarter, the growth market witnessed a growth of 26% to 499 crores. The quarter performance was led by a strong growth in Brazil and Canada business. For the quarter, ARV business stood at 251 crores, growth of 61% year-on-year. Growth in dollar terms, the growth was 47%. R&D expenditure is at 415 crores during the quarter, which is 6.5% of the revenue, against 4.8% of the previous quarter. Net organic capex during the quarter is $82 million. This includes normal capex of 43 million, penicillin G project 23 million, and third-party development expenditure around 16 million. The cumulative PenG capital expenditure is $89 million against the estimated expenditure of $250 million as on 31st December. The average forex rate was 82.1075 in December 22 against 79.6123 in September 22. Net cash, including investments at the end of September, was 203 million. The average finance cost is 4%, mainly due to earning multiple currency loans, and with the increase in the Fed rate, the interest cost has gone up. Against the total finance cost of 45 million, we earned 42 crores as investment income from our investment. So our net finance cost is around 3 crores. Gross debt remains at 495 million. The gross cash reduced from 831 to 700 million at the end of the quarter. This is all from our end, and we are happy to take your questions now. Thank you.
Thank you very much. We will now begin question and answer session. Anyone who wishes to ask questions may raise your hand from the participant tab on your screen. Attendees are requested to use headphones or earphones while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Damayanti Kerai.
Hi, good morning. I hope I'm audible.
Yeah.
Okay. Hi, everyone. Thank you for the opportunity. My first question is on US. So quarter on quarter, you have seen good recovery. So how should we see US trending ahead, and which are your focus segments? So we understand injectable is one which is picking up well, but if you can just talk about US outlook in coming quarters or so.
Yeah. Thank you, Damayanti. So this has been a good quarter for us. We witnessed a relatively better quarter on all major parameters like demand, volume, net sales, and we had stable pricing. There have been higher demand for some of the products, partly due to seasonal factors. We also anticipate that the present trend would continue going into the next quarter and next fiscal year.
Okay. You mentioned stable pricing. So this is for your portfolio, or you are observing in general similar trend for the industry?
We can talk about our portfolio because that is something we have first-hand knowledge. We really can't say beyond that. Some of our products, see, this is on a net basis. We have some prices. There's always some price which goes down, some prices which goes up. We have seen in the past that mostly it has been going down. But now we see, if you ask me net, I think we are pretty neutral.
Okay. And my second question is on your R&D. So obviously, I understand due to some progress in clinical trials, etc., we have seen sharp jump. But in general, how should we again look at this this part moving ahead?
So the overall R&D cost, we had 415 crores for the quarter against 276 crores in the previous quarter. The main constituents of the R&D cost is the Curatech biosimilar. I suggest, Satkarni, can you like to elaborate on the biosimilar?
Yeah, thanks, Subbu. So, Damayanti, as Subbu had mentioned, the contribution towards the R&D expenditure primarily is because of the advancing phase 3 portfolio of our programs. As we talk now, we have 3 products in phase 3 clinical trials. One of them reaching the closure of the clinical trial, and 2 of them actually in clinical trials now with about 30-40% of the recruitment done. So we forecast the clinical expenditure to continue for at least another 6 to 7 quarters time from biosimilars, because the pipeline is maturing, which is good news for the organization. So yeah, that's my guidance on this subject.
Okay. And my last question, so last quarter, we obviously heard a lot of, I think, issues due to what we saw on the, what was there with the management team, etc. So in terms of governance improvement, what steps you have taken so far, say, compared to previous few quarters?
So, in terms of, what is that you said? In terms of?
So, like previous quarter, obviously, I think we had seen some development related to...
You're talking about that? In terms of during the quarter, what we have done is based on the discussion which was going on with the investors in the last 1 year, etc. We have increased our independent, directorate by about 1 number, and we have appointed the board of directors have appointed Mr. Shantanu Mukherjee, who was the ex-managing director of State Bank, one of the subsidiaries of State Bank of India, as the independent director. He came with a rich experience of about 30 plus years. And this is one significant step which we have taken. And he will be forming part of the governance board for the company. That is a very significant step we have taken.
Okay, okay, sir.
Yeah, please.
So this we have +1 independent director now, and you think this is a major improvement?
Yeah, I think now the number of independent directors in our company is 5 out of 10. So
almost 50% are now independent.
Yeah, 50% is the independent directorate, and we have 4 executive directors and 3 executive directors and 2 promoted directors.
Okay, sir. Okay, thank you.
Thank you. The next question is from Ronak. Ronak, please unmute. Yeah.
Hello.
Yeah.
Hi. Good morning. I just want to understand. Recently, you got a US FDA approval for linaclotide. So, can you just throw some light on that? That what's the expected revenue you are envisaging for the next few quarters?
Even there?
Yes. Not an injectable product. Which product are you referring to, Ronak?
No, I can take that.
Yeah, please go ahead.
Yeah. Subbu, shall I go ahead?
Yeah, please.
Okay. So we got a recent approval, but the issue there is we've also got settlement on that, and we will not be able to launch it now. I think you're talking about linaclotide capsules. Yeah. Yes. So that we can't do we can't commercialize it because we have a settlement on it. It's sometime beyond the immediate future.
Okay, thank you.
Thank you. The next question is from N. Jayakumar.
Hi, good morning. Can you hear me?
Yeah, very much. Morning, Jaykumar.
Yeah, good morning. In line with shareholder value and everything else, I think governance you've addressed. But one of the things that for a company that's trading at 5.5 times EV EBITDA and almost single-digit PE multiples, it's almost logical when you have net cash to look at buyback as a way of rewarding shareholders and reducing the undervaluation, if you will, especially in comparison with other peer group pharma players. Any steps towards that? Because I noticed certain changes in articles that you've talked about. Anything to do with this that you can throw some light on?
Yeah, I'll address it in two parts. The first part is this question came up in the last quarter itself, and we have addressed it. This buyback, this will be addressed in the May board meeting. If at all it will be addressed in the May board meeting, because we have taken a very huge task of accelerating the Penicillin G project, which is one of the future potential for the company. And that involves quite a significant money to the tune of around $250 million, right? So we said we will be addressing that. And in terms of the second part of the question, which is an article, yes, you are right to some extent, because the articles which you are having is it's a pretty old one, and it is not in full compliance with the Companies Act. So what we have done is we have reviewed the entire clauses, and we have replaced wherever it is not in congruence with Table F, Schedule 1 of the Companies Act. We replaced it, which involves the buyback provisions also, apart from the other provisions.
Could you be more specific? I've not understood the.
Yeah, because our existing articles of association will not permit for the board directly to approve any buyback if it is less than 10% of the net worth, right? We need to go to shareholders, which means another 50 days. So what we have done is, first we want to amend the articles in line with the Companies Act Table F of Schedule 1. That is what we have done, which means the board will be at liberty as and when they decide to move ahead with the buyback, it can be implemented quite fast.
Understood. I have, in fact, a second question, which is, I don't know if I missed this thing and it has been addressed earlier, which is the pricing pressures in the US and logistics costs. I understand from other this thing that the logistics costs in general have come down, which has been a cause of some margin compression in earlier quarters. Is that the case with us as well in terms of in terms of pricing pressures have they eased significantly?
Yeah. So as far as the logistics cost is concerned, Subbu can corroborate this because India sends the product to us. We have seen better pricing in terms of logistics. That's number one. As far as the US pricing on our products is concerned, I had mentioned earlier that we see some kind of stability. There'll always be some price changes. There'll be some downs and there'll be ups. In the past few quarters, it has been mostly down. So now we see fairly stable prices. That's what I would like to say.
Yeah, in terms of the freight cost, which Swami has mentioned, we are seeing a significant freight cost reduction between last quarter, Q2 as well as Q3, right? Overall, there has been an improved freight cost, reduced freight cost between last quarter to this quarter, Q1 to Q2 as well as Q2 to Q3. Does it answer your query?
Yeah, thank you. Thank you very much and all the best.
Thank you.
Thank you. The next question is from Aishwarya.
Aishwarya, you have to unmute yourself, I think. Yeah, you can speak now.
think some mic issues. The next question is from Neelam. He falls back in the line. We'll take next as Nitin Agarwal.
Thanks for taking my questions. I've got 2-3 questions. One is on the US business. Have you started to see a pickup in new business orders again? Given the fact there have been a recent round of FDA regulatory action on certain companies, and that has led to an increase in NBOs in the past. Have you seen the trend happening all over again?
Tommy?
Sorry about that. Okay. So we have seen better demand, better volume growth in this quarter, and we believe that this will sustain. This could be various factors. One was seasonal. The other could be some other competitor or some other company not being able to supply. Whatever, we have seen definitely better growth, and we are confident that this will sustain going forward.
And so, just on that, through the last maybe 3 or 4 months, as we've been through, for example, October to January and now, have you seen this trend improving, or it's been sort of steady? How would you qualitatively assess that?
I'm sorry, what improving?
The demand trend or the volume growth trend, has it been improving through the months over the last 3 or 4 months? Is it getting better?
I would believe so. See, part of this could be seasonal, but I think on an overall basis, even other than the antibiotics and seasonal product, we have seen some amount of surge. Yeah.
Okay. And so secondly, on the US business, apart from the base, now, in terms of the new product launches, what can we look forward to? How many launches and how many potential launches that in your assessment could be more than $20 million plus for the year?
In the last quarterly earnings call, we had mentioned that we are looking at some new ANDAs being commercialized over the next 12 months. I think we talked about 40 ANDAs being commercialized. We still hold that view. In fact, we have got some approvals, and we are in the process of launching in the current quarter. In terms of top line, I would say that conservatively, we would expect about 50 million on an annual basis, maybe a little higher, but that's what we would expect. Obviously, it's not going to happen next quarter, next month. It's going to be over a period of time. I'm talking about the next 12 months, we would see some kind of increase.
Okay. And if I can on that, so Yugandhar, on the injectable business, we've seen a pretty strong recovery. I think this was probably one of the better quarters we've had in the injectable business in some time. How should we look at this business now on a next few quarter basis?
We are quite positive, Nitin, in terms of the way we have weathered the storm, and the first 2 quarters were not great. But third quarter, we have seen stable pricing and increased volumes. And with the new products, in fact, we are launching almost 5 new products every quarter. And some of the new products and sustainable pricing and volume recovery, we feel like going forward into quarter 4 and quarter 1 of next year, we do feel that it could be a double-digit growth quarter on quarter. That's what we feel. And we already launched amphotericin B in January, and we do have some interesting launches coming forward.
Sorry, just to reconfirm, you said we were about $74 million this quarter, and we're talking about QOQ growth in Q4 and Q1 on this number.
That's right.
Thanks. That's very helpful. And lastly, on the US, in terms of the non-orals presentations, non-orals, non-injectables, we've had some filings for inhalers, transdermals, and some of the other new presentation formats. Any of those do you see getting commercialized this year?
When you say this year by March, no, we don't see that happening.
March 24, I meant FY24. I'm sorry.
So I think that would be a very aggressive time frame. It could possibly a little later. But we have got an oral solution now from one of the facilities. So obviously, we are looking forward to other introductions. This could take a while.
Excuse me, last one. Subbu sir, on the Penji project, if you can give us some sense on the project size, the commissioning time, and what can it really entail in terms of possible revenues at the current levels of Penji prices?
So, regarding the Penji project, the size of the project we are working is around $250 million plus or minus 5% contingencies, right? And so far we have spent around 89 million. The D-date for the Penji project is 1st April 24. While the D-date is 1st April 24, it is always our endeavor to advance it. That's what we are working on. As on date, the installation is expected to be over by September, October of this year. And we will be doing the pilot batches between November, December. And I mean, till the time it succeeds, we will do it. But in any case, it will not be later than March. And if the pilot batches succeeded in the first iteration itself, it can be advanced also. In terms of the execution, etc., a lot of people working and things are going at pretty fast. And we are looking forward to this project, really speaking. And I'm sure government being the major sponsor for the project by way of the PLI incentive system, they are also looking at it. And every one of us are looking forward for that.
Okay, thank you very much.
Thank you. The next question is from Bino.
Hi, good morning to all of you. Subbu, could you please explain a bit on this sale of non-antibiotic API business to the subsidiary? What's the rationale? What's the thought process?
So the thought process is API business. Today we are having around, including antibiotic and non-antibiotic, etc. We are having around 10 units. And what we are planning to do is bring all the regulatory units under one, all regulatory API units under one. Wherever the major contribution is the regulatory in nature, we'll try to bring it under one umbrella. This is to ensure that mitigate the risk factors like regulatory risk, margin risk, everything. We want to bring it under and give a massive focus into the overall value creation for the stakeholders. That is the whole idea. And this also will help in terms of improving the operational efficiency. And today, if you really see the regulatory units, what we have been majorly around more than 75% is supplying internally and about 20% external. So by creating under one umbrella with a new management, can we able to focus more on the external also? Like that, we are looking to all possible options by which we can create value for the shareholders. That is the overall idea. And at the end of the day, if we can have any strategic tie-up, etc., we can always look into that. Like what we have been trying to do for UGF, we will try to bring under a separate professional management. All these things we are trying to do that.
Okay. Does this have any tax implication?
There is no tax implication. It is a 100% subsidiary. Any 100% subsidiary, it is exempted under the, no transfer, no tax on the transfer of the assets. It is exempted as per the income tax law, not an issue.
Understood. Last question on generic Revlimid. Now that the market has formed, a lot of your competitors have entered and you also have a settlement. Would you be able to give some timeline about your launch? Would it be FY24 or FY25?
It's Q3 FY24.
Oh, great. Thank you. Thank you very much.
Thank you. The next question is from Tushar.
Tushar? Looks like he is not there.
We'll move to the next. The next question is from Aishwarya.
Yeah, can you hear me?
Yeah, Aishwarya.
Yeah, thank you very much. Sir, I have 2-3 questions. One is that how we should see the compliance, especially when you guided that there should be increase in the revenue number by 50 million in the next 12 months. So, which are the key 2-3 plants which are associated with this revenue growth, and how's the compliance level over there? In terms of FDA inspection and any 483 resolution.
Aishwarya, this question is two parts, if I'm right, no? One is relating to the increase, which Swami can address. In terms of the compliance, I think today, if you really see the formulation, all the units are under VAI. And apart from that, couple of units, I mean, one unit has been inspected recently, or 2 units, APL Healthcare Unit 1 and 3, that has been inspected. And that is also, we have informed to the exchanges, if you have noticed. So as on date, in the formulation business, we don't have any issue in terms of the regulatory compliance. In terms of capacity, there is enough capacity to augment the supplies, etc. In terms of the growth percentage, Swami can explain
Yeah.
that.
In terms of, with regard to the what guidance we are saying about 40 products that's likely to come over the next 12 months, we have factored in any compliance issue that could be there as that's known as on date. If an API plant has a problem, we've considered those factors while deciding what are these 40 odd products that we are going to commercialize. So we believe at this point of time, this is realistic. Going forward, obviously, if there is any inspection, we need to see the outcome of it. But we have factored in this compliance matter.
Sure. Thank you, sir. And one more question from my side is how we should see the free cash flow generation going forward in next 2 years, where we need to factor in how much we spend on R&D, how much is CapEx. So with
I should have to put it, with this maximum, we have achieved 415 crores per quarter is the maximum R&D spend we have done in any quarter, to the best of my memory, right? Even if you continue with that, and I don't think we'll be continuing 415, probably it may be slightly lower, right? And with the Pen-G project and some of the projects going to take place next year, this will we will be able to achieve the good free cash flow coming from the project. Even the biosimilar also, as Satkami says, we have already said in the past meeting, earnings calls, etc. We have filed 2 products, 1 more product also we are going to file it, etc. This is expected to generate cash flow starting FY25 onwards. So I can clearly see FY25 Pen-G project will generate cash, and our biosimilars will generate cash. Plus, various projects are in the process of commissioning, etc. If 1 or 2 of them have been successfully commissioned, apart from what I mentioned, that also will generate the cash flow. I think going forward, I can see very clearly cash flow generation will be very good starting FY25 onwards.
Sure. And how about 24, sir?
24 also, I think we should be able to generate the cash flow because apart from the existing this one, we are not undertaking any new project, no new project except the one which I have announced recently, that biosimilar one CMO facility we are thinking of putting it. Other than that, I don't see any new major greenfield projects are being thought of. If any decision taken, etc., we'll be informing the normal earnings call.
Sure. Sure, sir.
And most of the projects are either 40-50% completed. Like biosimilars, capex is over. It's only the clinical trial which is forming part of the R&D cost, which is being factored as part of the P&L. Then if you really see the US capex, most of the projects have been completed. They're waiting for the exhibit batches and the final approval. You take China plant is installation is over and we are doing the exhibit batches and like that so and so. So we don't see a major stress on the cash flow on account of the projects, and business is also doing well, and we will expect to do a good cash flow.
Sure. And so, here, sir, like we know that the US business is turning a bit more difficult because of the competition. So with that into consideration, we have a less control on the revenue side. Anyway, we are doing extremely well. Despite that, we don't see very meaningful growth coming on the top line. So the levers left out, how to control the cost side or the capex side. So do you see any levers which are visible in say 24, 25, which have not been discussed so far?
See, Ashura, if you really see the annual report dated 31st March 22, we have identified the 5 levers, and one is the biosimilars, and second is the API PNG plant, third is the API business, and fourth is the UGA, which earnings call in the last time itself, Yugandhar has given a clear roadmap for the UGA business. And fifth is the India business. India business, because of the other priorities, is going, not taken off, but other things have taken off and going in an accelerated pace.
Sure. As talking more on the absolute numbers in terms of cost side or the capex side, which probably will be
one of the significant. You are right, I still right. One of the significant steps which are taken is carving out the API business to achieve the operating efficiency, to improve the capacity utilization and service the market. We are already carving out, and we are in the process of doing. And this will take with effect from 1st April. We are working on that. And that also will contribute. We can see a improved performance from the API business, which is the main cost base for the entire company. You can see an improved performance. And on the antibiotic side, PNG is coming, which is another major cost saver, because we have been buying all the related KSM and the intermediates, etc. So these are all the steps being taken by the company.
Sure, sir. I'll connect to you offline. Thank you very much for these details.
Thank you. The next question is from Nikhil.
Yeah, hi. I'm audible?
Yes, Nikhil. Please go ahead.
Yeah, sure. Sir, I wanted to first check on the R&D side. Now there's a pretty sharp jump on a quarter-on-quarter basis. I understand that there are a few clinical trials that are ongoing, but I also wanted to check, is there some change on the R&D front, strategy front that has happened in the last quarter or so? Is it that the US outlook seems a bit improved, and because of that, there's a step jump in the R&D spend, X of biosimilars as well?
Now, I think the key contributor to the R&D spend this quarter is the biosimilar. Compared to 75 crores expenditure of last quarter, this is 180 crores this quarter. We have explained in the last quarter itself, our R&D spend for the year will be somewhere between 6 to 6.5%. The first half has not taken place, and we will be incurring more costs because the timing of the clinical trial, etc., also required, etc. And because of that, this 2 quarters, there will be a good R&D spend that will happen, which has been already informed in the earnings call, last earnings call.
Okay. So this quarter, the R&D to sales at around 6.5%. Do you see a gradual moderation in this number in the coming quarters or year?
Ideally, we should take around 6 to 6.25%. 6.5% will be a outer limit, but I am talking from an absolute amount. It's a function of the turnover also. So 6 to 6.25% on the existing turnover, achieved turnover is the norm which we are looking at.
Okay, so if the revenue goes up, this number will come down because you are talking
because we are talking about the absolute number only.
Current, okay, understood. And also, Subbu, I just wanted to revisit the CWIP number. I think at around September, this was 3,200 odd crore. So what is the capital work in progress today?
So the capital work in progress today is something like, if I'm right, it's around 4,000 crores. it is around exact amount. If you really see, it is 4,200 crores. Tangible and the intangible around 800 crores, right? The major capex is the China plant, which more or less it's completed 600 crore. As I told you, its installation is over. Curatech, we have already incurred the cost. It is a question of clinical trials only, which I explained, right? And we are putting one UGA manufacturing plant in Vizag. So that expenditure is still going on. Like that, some of the projects, either it has been installation level, it is more or less 90% over, or it may be the process of 40-50% is over. As I said, these are all expected to start commissioning by 31/3/24 onwards.
Okay, so it will take still a year for the expensing out of this CWIP to happen.
No, this will get capitalized on or before. I mean, at least some of them will get capitalized on or before 31st March 24.
Okay, understood. And also, sir, in this CWIP number, how much is the pre-operating expenses that has been capitalized, whether R&D or whether other plant-related expenses?
It is getting. I will get the data separately, Nikhil. I don't have it right now with me. I have the overall WAP number only.
But is it a sizable number? Because I mean that directly
impacts.
It cannot
be sizable. Any project, if I'm talking 4,200 crore is the tangible. No, you can take something like 10% will be the pre-operative, including all, and that is a guess. But I will get the exact number later.
Okay, understood. Also, sir, I mean, revisiting the PLI project as well. So $90 million incurred out of budgeted $250 million. The timeline seems pretty tight. I mean, you have only 5-6 months to incur the remainder capex. So wanted to understand, is the entire $250 million needs to be spent to commence the project, or you can commence the project partly as well? Maybe, I mean.
No, I think, Nikhil, what we need to look at it, in the case of the projects, it is when we said 90 million is the cash spend, it doesn't mean we are going to start some of the work now. We have issued the purchase orders long time back. So all the projects will have a gestation time in terms of completing the work and then installation. And the payments will be on successful implementation or successful dispatch of the material. So most of the material will start coming between April to June, and it will get installed. Not commission is not the right word. Installed between July to September. So that's the way you have to look at it. That as and when they start dispatching, we need to make the payment, or based on the successful assembly, it has to be paid, something like that. You got it?
So civil works have been done.
Civil works more or less, I would say around 75-80% is already completed. Even the mechanical and mechanical and electrical is also purchase orders have been issued more than 1,500 crores already. I think the last earnings call itself, if I'm right, we have issued more than 1,500 crore purchase order. Probably by this time they would have issued the balance also. Could be another 200-300 crores.
Right. And also finally on this one, 15,000 tons was the planned capacity, and there was a captive and a merchant share. Can you also again share those numbers, please?
No. 15,000 tons is the total Pen-G capacity. And as we said in some of the previous calls, our captive consumption equivalent Pen-G is something like around 7,000 tons, right? That is the thing. And the balance will be for external sales.
Okay. And sir, what is the pricing scenario today? I mean, when the project was envisaged versus now, how has the prices moved?
I don't think today the prices are very high because of various reasons, but we'll not guess anything now because the project is at least 1 year away, and I don't like to guess any number right now.
But sir, with China opening up, my limited understanding of what's happening in other commodities, I think normalization can happen. So do you think that, or would you mind sharing some ballpark sensitivities around if pricing dips by this much percentage, you will still be making good economic value. Can you share
Yeah,
some?
we will make economic value. That much I can say. But I may not like you with all your contacts and interaction with the international, you are limited. So we don't have that much of interactions with anybody. So, but I can say one thing: even if the price goes to pre-COVID levels, etc., also we'll be well within the selling price. Our cost will be well within the selling price.
Okay, understood. And so one final question on the biosimilars front. Can you share some quantitative guidance on what absolute sales you are targeting from biosimilars in 2 years, 3 years time frame? And also in the US, how many field force strength is there from the Spectrum acquisition, and would that be leveraged to commercialize the initial biosimilars? So would there be any incremental spend required initially to commercialize the biosimilars, especially in the US?
Yeah, Satkarni?
Yeah, so I will answer your question in two parts, Nikhil. With respect to biosimilars for the next 2 years, as you know that we have 2 products filed right now with EMEA. We have filed a monoclonal antibody in oncology with MHRA. With the antibody in oncology segment, we have completed the necessary regulatory procedure with MHRA with one major pending action, which is the GMP inspection. The required on-site inspection is hindered by the availability of inspectors at this time, and our regulatory team is continuing to work with MHRA on this subject. At this time, the agency and we have agreed to take a clock stop until April and are hoping to have GMP inspection announced within this time frame. So once that happens, then I probably think we'll have at least 1 quarter of sales in this year, provided I will be able to obtain an approval for this antibody by Q2 of the next fiscal. With the biosimilars filed with European Medicines Agency, I have provided an extensive guidance in the last earnings call that owing to the COVID-19 workload and paucity of inspectors, we are stuck at day 180 of the clock. And on the advice of European Medicines Agency, we have taken a clock stop until the June of 2023. Now, the agency had mentioned that the situation will change as and when inspectors become available to travel and audit us. At this point, I am pleased to state that auditors have indicated end March as the dates for on-site GMP inspection. So in the last week of March, we are having a GMP inspection announced. So with this development, we are reasonably confident that the post-audit regulatory process will conclude at least for one of these products, and we shall be able to initiate the commercial activities in EMEA or the European region for at least one product before the end of next fiscal. And for the second product, probably in the first quarter or the second quarter of the next fiscal. So I am hoping for a continuing engagement with the agency and take the necessary regulatory formalities at this point of time. Additionally, we have also started filing with Health Canada, and Health Canada also had acknowledged the receipt of our file and started the review procedure. We have an audit announced with Health Canada in the first week of May. So I believe if things go well, we would also have the commercial sales kick in either in Q4 of the next fiscal or the early Q1 of the following fiscal, which is FY23, in Canada as well. So I think overall, we are looking at least 2 biosimilars to be commercialized in EMEA, Health Canada, and MHRA. And importantly, as you know that we are concluding a large metastatic breast cancer trial in 690 subjects. We will start the filing process of this monoclonal antibody in India and emerging markets in July of the next fiscal. And by September, we will file it with European Medicines Agency, and by December, it is our intent to file with the US FDA. Now, I am optimistic that in 25 we will have this product approved with EMEA, and also hopefully, if things go well, will also be approved with FDA. So I see 25 as an inflection point with this antibody kicking in the commercial markets, both in EMEA and FDA. I expect at least 1 quarter sale from this antibody in India to start with in the next fiscal, with EMEA being 24-25. So that's the guidance on biosimilars, which is part one of your question. The second one is about the spectrum, or the commercial field force that we have in the US with Acrotech Pharma. We have a presence in oncology segment. We are going to leverage the commercial front sales team or the team that we have with Acrotech, who will also be the front end for biosimilars in US. We expect the first biosimilar in the US to be approved in 2025. And we will leverage on the field force that we have with Acrotech Biopharma to take this product into the market. We are also planning to bring an immunology biosimilar by 25-26 in the US, which is used in dermatology indication. Again, as you see, if you have followed Acrotech Biopharma, they are investing in dermatology products and brands. So essentially, the idea is that Acrotech Biopharma will position our biosimilar brands in the US market. I stop here and ask if I have answered your query or if there is any further follow-up.
Yes, yes, Dr. Satakarni, I think it's very clear and I think it's very helpful, and all the best for this initiative for the company.
Thanks, Nikhil.
Thank you. The next question is from Tarang.
Hi, good morning. Am I audible?
Yes, sir.
Okay. 3 questions from me. First one is on Europe. I think it's good to see that you've come to a 200 million euro quarterly run rate. The last time this happened, if I recall, was in March 20, but what I understand was there's some bunch up of sales that happened then. So from here on, is this a base that we can expect you to maintain? If you could give us some sense on what's happening in Europe, and how should we look at it going forward from here?
Yes. So we had a good quarter in Europe in the third quarter, and you have seen that actually in a quarter 2 we were at 190 million euro, and this quarter we have exceeded 200 million. But quarter 3 is always strongest for us. But on a year-on-year, we have a 7% growth. And even on a quarter-on-quarter, as I said, that is a seasonality, 2% growth. But considering the discontinued business, then the quarter-on-quarter was a 5% growth. So I guess that about 185 to 190 is the base line. And actually, based on the seasonality and some of the opportunities which come up, we may grow at a middle level of a single-digit growth.
Okay. Thanks. That's helpful. The second is on Eugia, Yugandhar. When should we see the Vizag plant revenues starting in? My sense is you'll commercialize it, there'll be exhibit batches, approval from the regulator. So if you could just give us an updated timeline on this. And second, last quarter, at least the commentary that we received, that was that especially in injectables, there was heightened competitive intensity, which was showing up in your numbers and also in the numbers of the peers. And that seems to, at least from a number basis for Eugia, that seems to have reduced. So if you could just give us some sense on what's happening in the injectables market space.
And the first thing is on Vizag plant. We will be starting exhibit batches from this month onwards, and we already requested European authorities to inspect the plant in November of this calendar year, which is November 23. And we expect that in the best case scenario, it might be a quarter 4 of FY24 commercialization. Worst case, it might be quarter 1. And we are also going to file some of the shortest products of US to trigger an early audit for the plant. That's on the Vizag plant. So you can take it as FY25 is the commercialization for Vizag plant. And in this entire fiscal year will go into various exhibit batches, inspections, and all that stuff. On the US front, in terms of what we have seen, first 2 quarters, there was a significant pricing pressure for a variety of reasons. But quarter 3 and quarter 4, how we are observing is the pricing has stabilized. The volumes are improving significantly. And also, I think probably regulatory action on some of the other competitors is giving some minor tickling business at this point of time. But we will see like how it goes. But what I'm very confident of and very hopeful of is my team can generate a double-digit growth going forward.
Okay, and how much was 9 months FY23 revenues for UG, and what was the similar number for 9 months FY22?
It is flat because we don't give a separate this thing in the our P&L because it's on a pro forma level. But as you can see, it is just flat from FY22 to FY23.
Okay, that's helpful. Thank you. The next is on biosimilars. Dr. Satakarni, you spoke about doing some filings in Canada. Is it one of the products that you've already filed in Europe or MHRA, or is it a different product?
Essentially the same product that we have filed in Europe and MHRA. One of them is filed in Health Canada, and we are planning to file the second one also with Health Canada.
Okay, that's helpful. And second, I mean, I noticed that in Q2 of FY23, there is a biosimilar subsidiary that was incorporated. If you could give us some sense, what was the purpose? And second, some update on what's happening on vaccine. Specifically, you did get some regulatory pathway in your PCV vaccine this quarter.
Yep, Tarang. So on the vaccine front, we are encouraged by the fact that the subjects expert committee panel operating under the aegis of CDSCO or DCGI has reviewed our phase 3 pediatric data for the pneumococcal 15-valent vaccine. The data suggests that our 15-valent pneumococcal vaccine would be anticipated to help protect against the serotypes covered by the Pfizer's Prevnar 13 and also expand coverage to include 2 additional pneumococcal serotypes causing potentially a serious disease in infants. Thereby, how do we view at this SEC recommendation? The SEC recommendation should be viewed in the sense that they have granted a recommendation for manufacturing and marketing of the PCV15 vaccine to our JV company. So at this stage, we are going through the regulatory process of obtaining a manufacturing license, which is a normal course of regulatory procedure. I am optimistic that this procedure will conclude in the next few weeks, probably around 6 to 8 weeks time. Since the 15 serotypes included in our vaccine are responsible for a good majority of global pneumococcal disease cases, I'm excited by the potential, the broader coverage we can offer with the PCV15 vaccine. I plan to commercialize it 2 quarters from now, provided we will receive the manufacturing license in April, May. Then 2 quarters from now, we would commercialize this PCV vaccine. So that's part 2 of your question on the vaccines front. What was your part 1 of the question, Tarang?
There's a biosimilar subsidiary that's been incorporated.
That's right. So there is this subsidiary called Theranim Biologics, which you are talking about, right?
Yes. Yes.
Subsidiary incorporated, and we talked about it in the earnings call, I think the last quarter, the previous quarter. So the idea is to expand on the capacities to support any CMO opportunities in biologic space. At the same time, with our oncology biosimilar coming in, we would like to we would like to scale it up to an extent where we become extremely cost competitive in the low and middle income countries. So that's the idea.
Got it.
But right now, we are still discussing on how to shape up this project in the next fiscal year. So I will provide guidance as things evolve. But the idea is to become a CMO and also use additional capacities to make it more cost effective for our biosimilars to go into low and middle income countries. That's the vision behind this.
Got it. That's very helpful. Thank you.
Thank you.
Thank you. The next question is from Sriram Rathi. Seems like he's not here. The next question is from Abdul Kaleem.
Hello. Hello.
You are audible.
Hello, sir.
Hello.
Sir, I just wanted to get a clarification on this one. You told that there is some process that is going on for making the buybacks easier for this one. I technically I did not understand what exactly that was, but I just wanted to know whether the management is seriously thinking about buybacks, at least in the near future, and what will be the timeline for that one?
See, we are not averse to buyback. Okay. So at the same time, the buyback management, it is a decision of the board, keeping in mind, and board will decide, keeping in mind various financial commitments on various projects and other things. Board will take the decision at the appropriate time.
Okay. So you can't give any timeline for that one. Sir,
no, management cannot give a timeline for that.
Okay. But there is a thought process that is going on. That
there is a thought
in that one.
There is a thought process going on. That's the reason why we have been trying to comment the articles and other things.
Okay. Sir, another last thing, sir, because it is repeatedly, it will be coming in the social media, so that if the clarification comes from your side, it will be helpful for the shareholders. What is the formal relation between the Aurobindo Pharma and Aurobindo Reality, sir? If you can just enlighten on that one, sir. Aurobindo Pharma and Aurobindo Reality, sir.
Aurobindo Pharma and Aurobindo Reality are totally independent. They are no way connected, except both are having a common promoter.
Okay, so there is no formal
connection between Aurobindo Reality and Aurobindo Pharma. The only, if at all, there is a small connectivity is the Galaxy building where we are stay, wherein that is held by a company called Rai Durgam Developers, where Aurobindo Pharma is having a 40% stake and the promoter group is having 60%, but Aurobindo Realty is no way directly connected.
Okay, that is very helpful, sir. Thank you, sir. Thank you.
Okay.
Thank you. We will take the last question as Shyam Srinivasan.
Yeah, hi. Good morning, and thank you for taking my question. Sir, Subbu sir, just on margins, just going back, I know R&D has gone up, but historically we used to be a 20% EBITDA margin company. So just want your thoughts on, when we can look forward to those kind of margins. We have now started growing, and looking from the commentary on this call seems to suggest that growth can be sustained. So just want some of the levers of, say, reaching historical margins. Is there any timeline or any specific product mix that you would like to highlight that will help us reach there, or is it just ongoing growth?
One is ongoing growth, and second is one of the key thing which the management is embarking on the action plan is to increase the capacity utilization. That is also one of the reasons which you have said. We will bring a more focus on the API. That's the reason why we are carving out into a separate subsidiary company. The 20%, if you ask me, while we may not be able to give you a guidance, but certainly with the Pen-G project being successful, we may be able to reach that. It's my feeling at this point of time.
So sir, Pen-G project will start 1st April, right? 1st April 2024.
1st April 2024. That is the thing, because it will add some more top line, as well as it can reduce some cost like that. But this is, we don't want to guess at this point of time. Nearer the date, probably in the November earnings call, we may be able to give clarity on these aspects.
Sir, just following up on this. So from a cost perspective, you talked about logistic costs. You also talked about input cost inflation. Those you are now having a better visibility.
Yeah,
and the only thing that we
have been tracking all the freight costs, etc. We are trying to optimize all the cost from a overall leveraging the capacities, overall operational leverage. We are doing everything. Whatever possible we want to do, we have been doing that. And at the end of the day, all are a function of the top line, which there is some improvement started taking place, which Swami has clearly explained with the new products coming, what is the new launches he's planning, everything. Swami has clearly explained. With that, hopefully, we will also move towards that goal of 20%.
Got it, sir. My last question is on injectables again. I think 73 million, I'm just calculating it from the 366 million, at least for the US business. But what is the global injectable size? I think Yugandhar mentioned it's flat YOY, but is it closer to the 100 million still? And what are aspirations for 650 million? I think we pushed it out by a year, but just want if some of those aspirational targets can be reiterated, please. Thank you.
Yes, Shyam, I think you said it right. We are 100 million plus per quarter, and we want to go towards 120, 125 next financial year. And yeah, we are still quite hopeful that even after pushing by 1 year, like FY25, we should be around the numbers what we indicated in the past.
Got it, sir. Thank you and all the best.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for the closing remarks.
Thank you all for joining us on the call today. If you have any of your questions unanswered, please feel free to keep in touch with the investor relations team. The transcript of this call will be uploaded on the website www.aurobindo.com in due course. Thank you and have a good day.
On behalf of Aurobindo Pharma, that concludes this conference. Thank you for joining us, and you may now disconnect your lines and exit the webinar. Thank you.
Like the overslept.